Real estate investment is without a doubt one of the fastest ways to build wealth. But you must be knowledgeable in terms of how to play the game of real estate investment. And I want to begin by saying that you do not invest because it is cheap. You do not invest because it is fancy. You do not invest because it is an emotional decision. You want to invest because it makes sense. But you do not know if it makes sense unless you have enough skin in the game. Today I want us to talk about a couple of things. I want us to talk about the importance of the appraisal and the amortization schedule. And this should help to bring some degree of clarity of the kind of information that you need to ensure that your investment portfolios really is making the kind of sense that it should be making. Now, I'm going to begin by talking on the appraisal. Now, there are three main types of appraisal. There is the sales comparison approach or analytics. There's the income capitalization approach or analytics. And there's the cost approach or analytics. And all of these things you want to be able to analyze all of the moving parts that allows you to come up with close and accurate assumption of the value of that estate. I want to look at the very first concept, which is the sales comparison approach or analytics. And just to give you a little walkthrough of things that you want to consider when you're doing this. Now at this level, you are looking at what is known as the property type. There could be multiple property types and you need to know what you're looking for when you're making this assessment. There's property use, and I will come back to this shortly. The property can be either for residential or commercial. As an investor, both residential and commercial can be cash flowed, but you need to know exactly how to make this happen. The other moving part is what we call the location. The location also influences a number of factors in relation to the value of that estate. You have other things like age and size of the property. You have things like conditions of the property. You have things also like terms and conditions of the sale. There's something that we call discounted sales, and you want to take the time to really understand all of this and how it influences the value of that estate. You also have things to consider like upgrades and enhancement. All of these things plays a pivotal role in the value of that estate. In fact, there's what we call the natural appreciation of the estate, and there's another concept that you call the forced appreciation of the estate. As an investor, a young person's getting into the space of investment, you want to ensure that you're taking the time to fully understand this. Again, I begin this program by saying that you don't make an investment decision because it is cheap. You don't make an investment decision because it is fanciful. You don't make an investment decision because it is emotional. You're not making an emotional decision. You're making an investment decision because it makes sense. It means that you know that you can cash flow this estate. So what we've looked at first is what we call the appraisal approach. We looked at the sales comparison approach. Now, how do you make a decision whether after you would have analyzed all of this, it makes sense to invest in the portfolio? There's something that we call the amortization schedule. Now, what the amortization schedule does, it helps you to understand the terms of the financial institutions. And here is where you're looking at interest rates. Now, you're also looking at what we call the loan life cycle. The loan life cycle is also an important part because depending on the life cycle of that loan, that too will also influence the terms, which is the interest rates and so forth. Now, the amortization schedule really breaks down your payment schedule in the finest of details. There's a concept that we call the PITI. Now, what exactly is the PITI? The PITI relates to principal and interest, tax, and insurance. you need to be able to, first of all, deduct all of this on a monthly basis from the potential of that building or estate to cash flow. Earlier, I spoke about the use of the property use. In this case, the property use is going to be either residential estate that is going to be income generating, or industrial estate that are both going to be income generating. You want to be certain that from the income that this estate is going to be generating, that the PITI can be deducted, and when that is deducted, the estate still have a positive cash flow. You do not know this unless you're able to go deep into the belly of that investment portfolio, deep into the belly of all of the things that has to be considered, and then you arrive at this. All right, as a new person's coming into investment, you want to take the time to assess the PITI, principal and interest, tax and insurance, because in the developed world, these are things that you will have to look for. Now, when you deduct all of this from the monthly cash flow of this estate, you want to ensure that you're at least cash flowing between 30, 40, or even 50%. 50% might be a little high, but you at least want to ensure that you have a positive cash flow at about 25%. Why? You can settle with the 25% because while the building might be giving you at least a 25% cash flow, positive cash flow, you still have things like appreciation that is taking place. And appreciation means that you can leverage the excess value of the estate either into a BLOC or a HELOC, the home equity line of credit or the business equity line of credit. It depends on how you set up that portfolio. So I trust that today's concept, today's lessons for beginners into real estate was very useful. Now, if you find this information useful, I want to encourage you to like, subscribe, and share, so you will be the first to get this information that we're bringing to you on a regular basis. Of course, we're going to be talking a whole lot about financial instruments and how to leverage these financial instruments to start to build wealth for yourself. Now, I want to just make an announcement here. We at Pitch Deck 101 Global Capital Inc. 10X B&M LLC, and I want you to go to pitchdeck101.org. We are now able to fund your real estate project. We are connected with persons who are playing in the financial space. Over 120 private equity investors we can bring to your assistance in the event that you were thinking to get into the real estate investment, or even you want to set up a business. We can provide you with that kind of support. So here is where you can access capital, access information to make better and more informed business decisions, integrate your product properly into the market, and ensure that you're cash flowing like a king or a queen. Or with that being said, remember to like, subscribe, and share. My name is Gary Thompson. I'm a business development consultant by profession, a humanitarian by nature, and I'm the self-published author for several books, including 10X Branding and Marketing Blueprint, The Psychology of Money, and Impact Marketing and Branding. See you soon. Remember, reach out to us now. Don't sit on the fence. Don't procrastinate. Take action now.